A fund is an investment vehicle that enables numerous investors to purchase shares in publicly traded companies, with each investor retaining control and ownership of their shares. ETFs, or exchange traded funds, have grown in popularity since the first ETF in 1993. This is partly due to lower fees and improved flexibility. ETFs are priced and available for trading throughout the business day, which means improved liquidity for investors. Funds like ETFs are a great way to manage your investment risk, giving you access to multiple sectors and, in most cases, global economies. This can help you manage the risk of losing money within your investment, but also maximize the upside potential of making money. So what have been the best performing Vanguard ETFs in 2021 so far? So you may be in a position where you've done your research and you're now at the point where you want to invest, but you can't quite narrow down where you're going to invest your money. There are so many funds out there from so many providers. I know what it's like. It's very, very confusing. It's hard to see the wood through the trees. Now, for the purpose of this video, I'm going to be focusing on Vanguard. Vanguard because they are one of the leading providers out here. They have extremely good funds and they provide them at a very attractive price point in comparison to some of their competitors. So they're really, really big, great funds, and they are delivering really good performance. Now, clearly, a couple of disclaimers. Past performance is no indication to future performance. So because we're talking about the best performing funds so far this year, 2021, does not mean that they're going to be performing like that through the rest of this year. We don't know what's going to happen with global markets. This is the risk that you take. The second disclaimer is this. Please just don't go and buy one of these ETFs and put your money into one of these ETFs because I'm highlighting it as one that's performed well for the previous reason. And secondly, because risk. You need to understand what your attitude to risk is, how much risk you're willing to take, and whether or not this ETF actually matches your risk. This is the kind of stuff that I go through with people one-on-one on coaching. So you know that you're putting your money in the right place for you. Really important step, guys. So please don't take this as financial advice. Use this for educational purposes only. And please do your own research. Now, for the purpose of this video, I'm going to be focusing on 4 markets or 4 territories: UK, Europe, US, and then global, because it makes sense to go global, right? Diversification and all of that good stuff. So let's jump onto the Vanguard website and start to have a look at some of the best performing ETFs that they have right now. Now, if you're not familiar with the site on Vanguard, this is the landing page. If you want to get to here, you simply go what we offer, you go to ETFs, and you're going to land on the ETF page right here. Now, let's have a look at Europe first. Now, this top one, which is the FTSE Developed Europe, excluding the UK, is the highest performing ETF within this category. Now, the ongoing charge for this is 0.1%. Again, we mentioned ETFs, they provide them relatively cheap. This is a 100% equity. This is a risk factor 6 though. Now they score out of 7. So this is pretty high risk. So again, in doing your research, you need to understand and make sure that you're comfortable with this level of risk moving forward. So let's go into this particular fund and see where we are. Now this one's invested in 474 stocks, companies that is. That's the ongoing charge there, 6 out of 7 in terms of risk. If you're looking to invest, ISAs, tax efficiency first. This is ISA ready, so you can put your money into an ISA right now. Let's have a look at the performance. Now, the performance that we're going to be quoting in these videos are from the 1st of July, 2020, all the way up until the 30th of June, 2021. So we're looking at the first half of 2021. We don't have the numbers for July just yet, so that we're clear. Now, this is the best performing European fund at 29.71%. Now, if you go into the portfolio data here, you're going to get a flavor for where they're actually invested across Europe. So France, Switzerland, Germany. I'm surprised that actually they don't hold more in Germany, because Germany is the biggest economy in Europe. However, Vanguard have very, very good research teams, so all of this is methodical. So the leading country is actually France. Germany is 3rd. So you've got good diversification across the European region in this investment specifically. And you can see where it's actually split in terms of the sectors: industrials, healthcare, financials, and you've got consumer discretionary, technology is down here. You've got the different sectors that they're actually invested in. You can also, if you wish, go and have a look at all 473 companies that they're also invested in as well. But it gives you an idea of where they are. And if you are doing your research as a first timer, trying to understand what is going on, it's really important that you understand what all of this language on this page actually means and how it relates to the actual investment. Essentially, this is giving you your asset allocation. It's talking about where it's invested, in what proportions it's invested across different geographical regions, in this case, countries, because the geographical region we're talking about here is Europe, and in what companies and across what sectors or industries. May sound boring, but really important stuff. So this is the top performing one in Europe in the ETFs that they have currently on Vanguard. That is the VERX. Now let's go back and have a look at the global options that we have in the ETF here. Now, the top performing global ETF, actually, I'm going to highlight two because two of them have really shot the lights out. One's done a little bit better than the other. The first one I'm going to have a look at is the FTSE All World ETF, which is this one right here. The ongoing charge for this is 0.22. This is 100% equity. This is slightly less in terms of the risk factor. So this is a 5 out of 7. Why? Because this is a global ETF, which means that you're getting exposure not just to Europe, you're getting US, Europe, you're probably getting a little bit of the UK, you're getting emerging markets. We'll talk about that when we go into the portfolio data. So let's have a look at this one first. This is the VWRL. This one's invested in 3,618 stocks, so way more companies, which means you're getting greater diversification. Again, this is ISA ready. We go to the performance of this. This is 39.11%. Again, this is from 1st of June 2020 all the way up until, 1st of July 2020 all the way up until the 30th of June 2021. So really good performance. Let's have a look at the portfolio data really quickly. So because this is a global fund, you've got a lot of money in North America, which is essentially the US and Canada. You've got Europe here, you've got Pacific, which will be Australia, those kind of areas, emerging markets, a little bit in the Middle East. In terms of the countries, obviously, the US is going to be the biggest weighting for this because America is the biggest market on the planet. You're followed by Japan, China, UK, France. Canada is down here as well. In terms of sectors, this will be heavy in tech because the US hosts all of the tech giants. And as you can see there, 23% of this is invested in the tech sector. But you do have exposure to all these other sectors or industries here as well. In terms of companies, these are the top 10. Apple, Microsoft, Amazon. These will be similar when you have a look at most global funds, particularly with Vanguard anyway. If you're using someone else, maybe like Fidelity or another provider, and they have a global fund, I'll be very, very surprised if their top 10 looks drastically different to this. You're going to have Apple, you're going to have Amazon, you're going to have Microsoft, Google, which is Alphabet, in most people's top 10 when it comes to their investment or asset allocation in terms of where their money is actually distributed. So this is good to know. But again, you can go and dive into all 3,600 of them if you wanted to. So this is the first one that I wanted to highlight. This is the VWRL. We're just going to go backwards and we're going to have a look at the second one within this category on the global side, and that is the Developed World ETF. This is the VEVE. Now, the price point for this one is 0.12. Again, this is a risk factor 5. This is invested in slightly less number of companies, so 2,200 stocks altogether. Again, it's ISA ready. This one's performed at 39.37, so it's actually done better than the VWRL. Again, let's have a look at the portfolio data. It will be very, very similar. North America, United States, 64%, Japan, UK, France, Canada, Germany being the top countries in there. The sector's about the same. Almost the same in terms of the allocation to tech. Look at the top 10. Pretty much identical, really. Right, so that's the global ETFs. Now let's have a look at the US market specifically. Now, the US market is obviously the biggest market on the planet. There are some concerns with the US at the moment with regards to inflation. I've spoken about that a couple of times on a live. We won't talk about that specifically in this video right now, but let's have a look at the options that they have available in the US. Now, within the US, there are only two funds. Now, there's the FTSE North America ETF, which is a 5 in terms of the risk profile. You can see that right here, 0.1%, relatively cheap. Let's have a look at the performance on the North America fund. This is the VNRT. So invested in 662 stocks, Again, it's ISA ready. This one has done 41.86%. Again, this is July 2020 to June 2021. Phenomenal performance. Again, the US is the biggest market on the planet. Now, let's have a look at the portfolio data. It's all going to be in North America, as you can see. United States, Canada. Tech is going to be the biggest weighting here with all the other industries. Look at the top 10. We've got Berkshire Hathaway in here, which is Warren Buffett's company. You've got Nvidia as well, JP Morgan. But these top, 7 are very, very familiar. We've seen that before in the global funds as well. So this is the first one. The next one we're going to have a look at is actually the one where I've got some money in, and I put some money into it recently, which is the VUSA, which is the S&P 500 fund, which is this one right here. This one is at a price point of 0.07%. So one of the cheaper ones available here on Vanguard. If we have a look at this one's invested in the top 507 companies in the world. But again, you're only invested in the United States. This is ISA ready. It scored a 5 out of 7. And this one has performed at 40.40%. Again, phenomenal performance for the periods that we're talking about here as well. The portfolio data will be very, very similar to the other one. United States, you've got tech being the top right here. And you've got pretty much identical in the top 10 companies. That's the US market. If you're investing in Europe or you're investing in the US market or the UK market exclusively and not taking a global view, you're going to have concentration risk for the geographical region that you're invested in. Now, clearly, if you're invested in the United States and, for example, you're picking the S&P 500 like I did recently, then you are going to get diversification in terms of companies that you're invested in and across sectors. But the reality is you're still putting your money into the US market, which means that if the economy in the US falters or there is Armageddon, I pronounce things funny sometimes, Armageddon, then it means that you've got to be prepared for your market, your investment to basically fall alongside whatever happens with the economy or the markets in the United States. You don't have any insulation. Whereas if you're in global funds or ETFs, for example, where you're getting exposure to the UK, Europe, it doesn't really matter if the American market crashes or the European market crashes because you've got money elsewhere. It's a key thing to remember. Very, very important thing to remember. It's all about not putting all your eggs in one basket and seeking effective diversification. Now, the last area we're going to have a look at is the UK, which is our domestic market here. What part of our market has performed the best? So we're just going to go down to the UK market right here, and there are only 2 funds available for the UK with Vanguard. You've got the FTSE 100 and you've got the FTSE 250. Now, surprisingly, the FTSE 100 is not the top performing Vanguard ETF that is concentrated here in the UK. The top performing one is actually the FTSE 250. This is invested in 251 companies. Again, it is ISA ready. This is a risk grade 6 because, again, you've got all your eggs in one basket here in the UK. You're going to be invested across different sectors and different companies, but you're still in one geographical location. So this is a risk factor 6. You need to make sure you're okay with that. This is performed at 33.24%. So not bad in terms of the performance, not bad at all. But when you compare it to the US market, we are lagging behind. Now, let's talk investment theory a little bit here, right? Because oftentimes when you're investing, it's really important that you take a view for the future, because that's what you're doing this for. You're investing today in the mind that your investment is going to be worth more money in the future. So with that being said, I just want to kind of talk about the UK market and whether it is a market that should be ignored right now. Now, we do face our own problems. Brexit, obviously, we still got to contend with that. There is still a lot of value in the UK. We are lucky enough to be one of the top countries when it comes to the vaccination. And therefore, we have seen recently that actually the markets have rallied slightly. Hospitality, airlines are doing much better than they have done before, especially during lockdown, because of confidence returning with travel and getting back to normal. What that basically means is that it could be argued that there is a lot of value, so a lot of discounts. There's a lot of future growth to be had in the UK markets. And so if you're just starting out to invest, it's really important to kind of bear that in mind. Do you want to go where the lights seem to be shut out? Things are performing really, really well, i.e. the US markets, or are you looking at a diversified approach which allows you to partake in the US market because they are performing well right now? And again, these performance numbers are no indication to how things are going to be performing in the future. But at the same time, if you want to be invested in there and participate in there, are you also hedging your bets in the UK, picking up companies that out of the recovery have the potential to do really well? Really important point to make. And I make that because in doing the research for this video, I came across an article that actually said that the sector in the UK that has done the best is actually our small cap sector. This is a little screenshot of the performance. Stellar performance at this point in time. Now, this ETF obviously has done extremely well, but the numbers that you're seeing right here for this, the small cap, the FTSE small cap, is actually from January this year, not from July 2020 up until June 2021. So I say this and I highlight this just to highlight the fact that when you're investing, you need to not just follow the news, you need to actually have a strategy. Again, understanding what risk you're willing and able to take, what your investment time horizon is, what your objectives behind investing are. If you don't have a clue what those are, then coaching with me can benefit you. If you feel like it, reach out to me. We can have a free 30-minute discovery call to see if it's something that I can help with. If not, I'll say that I can't. But I can certainly give you some tips on how to do this best. Now, I think that's it for this video. I hope you enjoyed it. One thing, if you have made it this far, thank you very, very much. I do appreciate it. I know that a lot of these videos are often lengthy. I try to pack in as much context and content as possible. But let me know, are you invested in any of these funds right now? What are your performance numbers? Are you seeing and reflecting these numbers that we've had a look at here? Are any of these funds on your radar? You're not yet invested. Are you a little bit reticent? Or are you like, actually, Pete, I'm ready to get in. Let's go. Let me know in the comments below. If you've not already liked the video, please do smash that like button. It will really help me out with the YouTube algorithm, and share it with anyone who you feel may also benefit from this as well. That also helps with the YouTube algorithm. If you've not listened to the podcast this week, there it is right there. But remember, money is a tool, life is for living. I will see you on Friday.